Okay, let's continue. Then we are going to take example under to look at the taxation of trust, settlement, and excess. So let's start with example 1, illustration 1. Take this question. Mr. Aqua created a trust for his 4 children. For his 4 children are they Barua, Chidi, and Dafur. The records of the trustees for the year ended 31st December 2016. The records of the trustee for the year ended 31st December 2016. 31st December 2016 revealed the following information. Profit from trading activities. Profit from trading activities. Are you there? Profit from trading activities, 980,000 naira. Profit from trading activities, 980,000 naira. Interest received on fixed deposit. You know, the trustee, he also has fixed deposit account. It's also an investment. So the interest received on fixed deposit is 270,000 naira. It's part of income, right? The exit. At times you will see dividends received, so it's also an income, right? Rent from properties. Rent from properties in bracket gross. In bracket what? Gross. So again, when they say gross, they are not deducted tax. Yes. So when you are collecting rent, you are expecting to pay tax. So rent from property in bracket gross is 620,000 naira. 620,000 naira. Other income. Other income, 163,000 naira. 163,000 naira. You see? Then other relevant information include one, Darfur is to get a fixed annuity of 35,000 naira per annum. Darfur is to get a fixed annuity of 35,000 naira per annum.
To get fixed annuity.
Fixed annuity. Fixed annuity of 35,000 naira per annum. 2. The remunerations of the trustee is fixed at 20,000 naira per annum. 20,000 naira per annum. The remuneration of the trustee is fixed at 20,000 naira per annum. Right? Are we together?
Yes, sir.
Then per annum, I say 20,000 naira per annum, comma, plus 2.5% of computed income. Plus 2.5% of computed income. 2.5% of computed income. Are we there? The allowable expenses of the trustee amounted to 25,000 naira. The allowable expenses of the trustee amounted to 25,000 naira. That's number 3, right? Number 4, the trustee made the following discretionary payment. The allowable expenses of the trustee amounted to 25,000 naira. That's number 3. Number 4, the trustee made the following discretionary payment. Are they 40,000 naira? I said the trustee made the following discretionary payments. Are they 40,000 naira? Barua 30,000 naira. Barua 30,000 naira. TD 20,000 naira. TD 20,000 naira. And the full 15,000 naira. And the full 15,000 naira. Are you there? Number 5. Capital allowance agreed for the business of the trustee was 22,000 naira. Capital allowances agreed for the business of the trustee was 22,000 naira. This capital, why they say agreed was every arrangement must be approved by the Federal Inland Revenue Service, right? So they agreed or approved capital allowances for this trust business was 22,000 naira, right? Half of the net, number 6, half of the net distributable income of the settlement half of the net distributable income of the settlement is to be shared equally among the beneficiaries. Who are the beneficiaries? Ade, Barua, Chiji, and Dafo. They are the beneficiary, right? All right. Now, in this, you must have to get the computed income before you proceed. It's just like a business. You establish a business, and you want to know the performance of your business. You will deduct all the expenses from your transactions. Then, at the end of the period, when you deduct all the operating expenses, then you will see whether you are making it or not, right? In this case, the trading profit was already given to us. All the information we are provided. You are required to 1. Explain the terms settlement, trust, and extent. Right? 2. Calculate the income of the settlement chargeable. Calculate the income of the settlement chargeable to tax. Calculate the income of the settlement chargeable to tax in the hands of each of the beneficiaries. In the hands of each of the beneficiaries. 3. Calculate the amount of undistributed income. Calculate the amount of undistributed income of the settlement accessible to tax in the hands of the trustee. Trustee. The hands of the trustee. So, as we earlier explained, the first question is asking you to define or explain what is meant by settlement, trust, and exit. I will say, settlement, this is an agreement. This is an agreement made in writing. This is an agreement made in writing in which money is made available to another person. Money is made available to another person for his or her use without any interference whatsoever. So it means a transfer of an asset to another person to make use of it without any interference. The settlement could be in any form like depositions, you deposit money there, trust, covenant, agreement, arrangement, or transfer of asset.
Yes, sir. What is transfer of asset?
Trust. I said trust, covenant, agreement, arrangement, or transfer of asset. The settlement. So this is an agreement, a written agreement, right? Made available to another person. When you make available money, you transfer money to another person for use. So he will not interfere whatsoever in the course of that settlement. You have already settled that person. Do it. Trust. A trust is created. A trust is created when an estate or property is held by a person, trustee, for the benefit of named person called beneficiaries. So it is the trustee that administers the trust. So they are the management of the trust, management of the property. A trust is created when an estate or property is held by a person, trustee, for the benefit of named person called beneficiaries. Once when a person died, normally when you go to bank as next of kin, the person died, you go there, the banker will say, let us create an estate account for you. Because they will transfer that money to that estate account and you will keep running the money, right? In the estate, you will be bringing income also as interest, right? So when somebody held that money or properties, right, manage it on behalf of the beneficiaries, the person holding it is the trustee who is administering the property or managing the property on behalf of the beneficiaries. Right? Then an estate. An estate is the total of the properties of a person and is commonly used in executorships. And I said it is also mean what? A property of a deceased person. That's the truth. So we have gone with that that aspect. Then they said the question, what was the question here? Now, the first thing that we need to do is to get computations of undistributable income. You will write the title of this. The beneficiary. Who are the beneficiaries? Ade Baruwa and what? Chidi and what? Downful. What are they asking us to do? Computation. What's the first question here? Or second question? Undistributable income. It says undistributable income accessible to tax in the hands of the trustee. Computations of undistributable income in the hands of the what? Trustee. Trustee. Right? Now, you see, in that question, read it very well. Read the question. Read the question.
Mr. Abba created a trust for his 4 children, Ade, Baruwa, and Downful. The record of trustee for the year ended 31st December 2026 will give the following information. Profit for trading activity.
Good. First, you start with the profit. Profit for the trading activities. You start with it. Profit for the trading activities. How much is the money? 980,000. So, once when you write this, you will go quickly and look at your questions if you have capital allowances, provisions for capital allowances. Check it.
Okay, so capital allowance are being for business or association.
It's how much? 22,000. So you will deduct capital allowances. Very important at this stage. Capital allowances is how much?
22,000.
22,000. So when you deduct it, how much do you have? When you deduct 22,000 naira out of 980,000, how much do you have?
958,000.
958,000. Right? This is the net profit. Right? Alright. Then let's go. Is there any other income?
Yes, interest received for fixed deposits.
Then you add it. Interest received for fixed deposits. Right? How much is the income received for fixed deposits?
270,000.
You write it 270,000. Right? What do we have? Any other income?
Yes, we have rent from properties. That's gross.
Rent from rental amount. Rent amount from property. They indicated to you that it is what? Gross. Because nothing has been deducted. No tax charged. How much is
620,000.
620,000 naira. Right? Alright. Do we have any other income?
Okay, we say other incomes.
How much?
163,000.
Other income. Other income is 163,000 naira. Right? Do we have any other income again? So that we can get our total income.
No, I don't think they say other life information.
Add this figure together. Let's have our total income here. Add them all together.
$2 million.
2 million.
11,000.
2 million and 11,000 naira, right? 2,011,000 naira. Okay. Now, let's move. Now, after you know that you have established and get your total income in the course of this trust business, you will look at, do you have any provisions for allowances, allowable expenses you are going to deduct it?
Yes, there is allowable expenses.
Allowable expenses, it means it is the expenses being approved by the tax authority. Allowable expenses in the business of this nature. So, let's deduct the allowable expenses. Allowable expenses. Right? Now, what are the allowable expenses? Check it in your questions.
Yes, 25,000.
Allowable expenses. You write it 20. Check your question very well. Allowable expenses is what?
25,000.
Right? Now, check the question again. You will see
2.5% of computed income.
double fixed annuity is also an allowable expenses. That is, it's been fixed. The owner said,
Yes.
give this amount to double as annuity.
Yes, that's 5,000.
35,000. So you have to write it. Double fixed, you write it. Double fixed annuity is from the income investment. Fixed annuity. You know annuity, right?
No, sir.
Annuity, when you invest in an organization, annuity is being compounded. The interest is being compounded annually. That is why we call annuity. It's from the investment, the return from your investment. You know, when you plug your money into a company that is making trading and making profit, every year from the income or interest that you are generating is being computed annually. Right? That is why they said annuity. So from the income that you are earning from your investment, that this man said, it is authorized from the will that you should what? Give so amount is being fixed by him annually from the investment that I have. I invested. So he authorized to give the one of his child how much?
35,000.
Then you write it 35,000. Any other allowable expenses? You look at it again. Do we have remunerations or salaries for the trustee? How much it is? Very important.
80,000.
You write it, remuneration. You are paying these people now. So you charge it to also allow other expenses. How much is the money?
20,000.
20,000. Are we together? Now, what is another statement there? Do we have another thing? From the question, check it very well. Check. Check. From the question.
So the trustee made the following as in describing payments.
Yeah, we are here to be there.
Okay.
Check.
Okay, say, remuneration of trustee is fixed at 20,000 plus 2.5% of the computed income.
2.5% of the what?
Computed income.
Computed income. Have we computed our income?
Yes.
Where is it?
This is our income.
Yes. And what they said is that amount?
2.5%.
2.5% of what?
Computed income.
As what?
No.
Check the statement very well so that you will get it right.
Remuneration of the trustee is fixed at 20% per annum plus 25%.
Plus, this is remuneration that they fix, right? They said plus, then you write another one. Remuneration, another remuneration. That's the plus. We are trying to interpret their questions, right? Of the computed, 2.5% of the what? Computed income. So, what you do is 2.5%, you write it here, all over what? Times. Write the computed income. How much is the computed income?
No, it's not wrong. 20.
You write it here. Please, 127.
105.
When you add this plus this now,
Okay, so give us
2.5 all over 1
2.5.
times the amount here, computed income 2,011,000. Say computed income. Now you know that you have to deduct the other expenses like the fixed annuity. Are you there? The remunerations, right? Then before you get that computed income, we have not gotten the exact income. So what we will do is we will minus this one, minus 25. Minus 20 minus 85. Then do the calculation and give us the figure.
So our minus is in front of charges.
You have to, before you get the computed income, this is the gross now. Then you deduct all this one, this. Then by this one, then we'll get the figure for this remuneration based on their grammar here. Since they said 2.5% plus, we are getting the remuneration exactly. So we want to get the income, the computed income, until when we deducted the expenses that we incur, then we'll get our income, computed income. But this at this rate is gross income. So let's get it.
Okay, 1.93.
Have you multiplied by this? Times 2.5 divided by 1 or 2.5. Give us the answer.
I want 47.
Good. 47.
0997.
Okay. Have you approximated?
Approximately, this one is 5, so approximately is going to be 8.
Yeah, good. So at this point, we have done with. Let's get our distributable income. Calculate this, add this plus this. Let's get the total, then we deduct it from this so that we get our distributable income. Right?
So So I'm adding this thing with this one, Johnson. I'll add the 25 with this 7, 4, 7.
This plus this plus this plus this. Okay. All of them, they are expenses. Allowable. These are the entire allowable expenses. The allowable expenses is here. Then the man said, give that fool, he said, based on his will, he said a fixed amount should be given to that fool on annual basis, that's 35,000. Remunerations of the trustee is 20,000 plus 2.5% of the computed income. And this is the 2.5% of the computed income for 7,098 naira. So for you to have the overall allowable expenses, then you add this plus this plus this plus this, then we will get our total allowable expenses. How much do you have there?
Yeah, 127.
127
0 98.
98, right? Then deduct it from 2,011,000 naira, so that we will have our net distributable income. Net distributable income.
1883. 883. 902.
1883
902.
902. Right? This is the main. Sorry, it's not a net distributable income. This is the computed income. At this point, when you deducted all the allowance expenses, it will give you the what? The computed income. The computed what? Income. Now, we quickly look at it. Let's look at the questions again. Is there any provision for discretionary payment? We have explained this earlier.
Discretionary payment. Are they showing this? Sorry, I didn't get the question, but I think that 25 also. Then, Banua.
You have to get the question so that you will know exactly what you are doing. They said the trustee made the following discretionary payments. Are they 40,000 naira? Baruwa 30,000 naira. Chidi 20,000 naira. And Dafur 15,000 naira. You know, it is the trustee that made the following declaration. They paid these people because these are the beneficiaries. They are acting on behalf of for the deed, the agreement of the deceased. Here are the will. These are the children. They giving them so amount. He entrusted the wealth in the hands of the trustee. Right? So you will get this one also. Now let's go back and we want to get the net distributable. The net distributable income. For us to get that net distributable income, we will have to deduct the discretionary what? Payment made by trustee. Are we together? Now, the deduct it here. Set discretionary deduct discretionary ordinary what? Payment. Right? We have Ade, we have what? Barua, we have Chidi, and Dafu. So calculate it. We have what? Ade 40,000 plus
30,000
30,000
plus 20,000
20,000
plus 15.
plus 15. Give us the total. How much is it?
30
You can't make now, so you will just be following like that.
Do we have
100 and what?
105?
105,000. Write it here. 105,000. This also money going out, so you deduct it. Deduct it, let's have the total. How much do we have?
We have 1778.
One
778 902.
Good. Now, since we have deducted the discretionary payment made by the trustee, right? This is the amount. Check the question again. There are statements they made on it. Check your additional information, number 6. What did they say there?
I think they said that half of the net distributed income of the settlement is to be shared among the beneficiaries.
Good. You hear it? This is a very clear question. They said half of the net distributable income of the settlement is to be shared equally among the beneficiaries. Who are the beneficiaries? This is net distributable income. Net distributable. When it is net, it means they have deducted all provisions, capital allowances, they have deducted allowable expenses. Under allowable expenses, we have the fixed annuity remuneration of the trustee, right? And also they have deducted the discretionary payment made by the trustee to the beneficiaries. You know, they are acting based on the deeds of the settlement, right? All right. Since we have gotten the net distributable income, right, from the settlement, the next thing for us to follow, the instruction given to us is they say half of the net distributable income of the settlement is to be shared equally among the beneficiaries. You see? You see? You see? So, we have these questions, in this case, we are done here. Then we will go to the trustee. Sorry, the beneficiaries, right? I mean the beneficiaries. Let's move to the beneficiaries. Who are the beneficiaries? Are they Barua, Chidi, and what? So we are there. That's number B. Computation. Are they Barua, Chidi, and what? Computation of chargeable what? Income. Chargeable income for relevant tax year. Now, you see, these people, and they are receiving income, and the tax authority will not allow them. They are the real beneficiaries of this settlement. So the tax authority will follow them. We are much interested on how much each of these beneficiaries earns from this settlement transactions. Since we have established the amount trustee generated for the accounting period, which is 1,778,902 naira, right? And there are instructions that are given on the settlement. As tax practitioners, we are interested to know how much these beneficiaries earn from this settlement, right? So that will enable us to charge the tax appropriately. So we have Ade, Barua, Chidi, and Dapo. Computation of chargeable income in the hands of the what? Beneficiary. This time around is beneficiary. Because they are the one now in charge. They are the one in it. We are there with the trustee.
So can you use this our class so that in case people will not enter? Now I finished my lecture.
Okay.
That class I used to use. Please people should so that everybody will enter the class. But me I want to see somebody. I finished my lecture.
So I want to start afresh.
No, sir, we'll start from here. From the hand of the beneficiary.
This man just came and I wanted to finish up so that I will help him explain just now. You can snap. Okay, snap when I will move. Alright.
There's a market for anyone who can do this.